Yeah, this is a tough one, right? And again, it's a question that all of us in this business get from clients every single day, right? They see the stock market doing well. They see extraordinary monetary policy. They see bond buying. They see all the government spending, deficit spending. I think we've got to have inflation, right? And again, the Fed has said, they said it as recently last week at the end of the Open Market Committee meeting. They view inflation pressures as transitory. So what does transitory mean, right? It means temporary, right? So they feel like we're going to see a spike here, and then things are going to moderate from there. First of all, a couple of reasons why we need to be thinking about inflation right now, right? You have the economy restarting and a lot of pent-up demand. You can see that in all the data, whether it's kind of the traditional data of employment reports or manufacturing surveys. But if you look at things like open table bookings, number of people going through TSA, you see the economy picking up. So there is this pent-up demand. At the same time, you've got supply chain issues, right? Think about raw materials, right? We've got some, look at lumber, right? Lumber prices have gone through the roof. You think about computer components, chips are a shortage right now. So you've got pent-up demand, you've got some shortages. And then the other thing that I think a lot of people miss is a little bit of this is a math problem, right? We're making comparisons on a year-to-year basis right now to a time last year when the economy was depressed. I think we had 2 or 3 consecutive months where the overall CPI index actually declined month to month. And now we're making those comparisons. So it makes sense on a year-to-year basis, you're going to have higher inflation. Things that I think about, we still have probably 8 or 9 million jobs that haven't been replaced. We don't have the economy fully reopened, at least not here in the Midwest where we are. We're starting to get there, but we're not there yet. And so, I do think it's right to think we're going to have higher inflation than we've seen. But I think there's a difference between higher inflation than what we've seen and the runaway inflation that people are really worried about. We've created a lot of credit through Fed policies to get really, sustained, kind of high levels of inflation. I think you need more demand for credit than what we've seen and what we're seeing right now. So, I would say inflation a little bit higher. I don't think that's a bad thing. We've had inflation too low for too long a period of time, but we don't really see, what we would consider runaway or problematic inflation in this cycle.
How about yourself, Kevin?
Yeah, I agree completely. I mean, coming from an economic shutdown to a reopening, it would be a bad thing if we didn't have a burst of inflation, a burst of resurgence. This pent-up demand, as Bill had suggested, is unlike anything we've ever seen in our lifetime. I was having a conversation with someone the other day, just hypothetically comparing it to post-World War II, where we're all so anxious to do anything, whether it's movies or restaurants or sporting events, and the airports are more crowded, the restaurants are more crowded, and beginning to look at cruise bookings and things like that. So it's not just, like Bill suggested, the traditional sense of economic data, which are all showing pretty good signs of a reopening economy, but it's the eye test. It's not just the price of lumber. It's trying to go into Sherwin-Williams or Home Depot and buy paint, looking at the price of gas and how that compares to what it was just 3 months ago. So I think this inflationary boost is productive. I think it's going to do well for economic. Inflation is never good, but a little inflation is certainly not bad. So I think it's going to do well from now on until the end of the year. What we don't want to see is a continued surge in this inflation that carries on for an extended period of time. So the idea of it being transitory and temporary is a great analogy.